All right, good afternoon, everybody. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure, I got out of gold today, got out of GLD, got pretty darn close to my target, so I just took it. Great trade. Shout out to Bill Tay for putting it on my radar initially. All right. So, Micron is off of highs. Thanks, Bill. Micron is off of highs, still up. That earnings report is phenomenal. It really is. It's phenomenal. The guidance is incredible. Micron sees first quarter adjusted revenue at 12.2 billion to 12.8 billion versus estimates of 11.9. Nice beat on rev. EPS guidance they crushed. First quarter adjusted EPS guidance is $3.60 to $3.90 versus estimates of $3.05. It's a huge beat. And the gross margin is a massive, massive beat. Guidance. Micron sees first quarter adjusted gross margin of 50.5% to 52.5% versus estimates of 45.7%. That is a phenomenal, phenomenal earnings report. There is no doubt about it. I think it was pricing in a $16 move. You would think with an earnings report as good as that, that it would be able to see the upper end of the kind of implied range. And it's not doing that. It's up $6, not $16. And it's pulled back, I think, $4 or so off of its high. So we'll see what happens with this Micron. I mean, that report is just incredible. However, it has had a massive, massive, massive move into the report. Let's pull up the daily chart. Just a massive move into this report. I mean, this was a $115 stock to start the month. To start the month, went into the earnings report at 166. I personally thought that pretty much anything out of the most incredible earnings report ever out of Micron would lead to selling. And we just got like the most incredible earnings report ever out of Micron. And it's only that, it's coming out even further as I'm talking here. It's only up now a few dollars from where it closed. Not impossible for this thing to even go red. So let's keep an eye on this one. It's just really important. Not only did I think that Micron would sell down on anything except for the most incredible earnings report ever, which just gave us. I thought that it would end the moves in these other high flyers, SanDisk, STX, WDC, and we're seeing all these names trading up after hours with Micron right now as a result of the Micron report. If you guys remember, the last Micron earnings report was at the end of an incredible, incredible run that honestly isn't as incredible as the one it's been on in September. But back in June, it somewhat similar. It went straight vertical from $94 to 128 into the report. The last earnings report it had at the end of June was also incredible. Maybe not as incredible as this one, though. This one's like truly mind blowing. And they gapped it up, and by the end of the next day, it was negative. That's been a common theme in this environment. I always pay attention to how a stock reads into a report. I have always found that when stocks have a really big move power into a report, that like a good report becomes not good enough and it could sell down. The opposite is also true when a stock sells down really hard into the report. Sometimes just a mediocre report is all you need to really boost the stock higher. And it's been a common theme over the course of the last quarter for some of the best earnings reports that we saw to actually be met by selling. So Micron, which I would argue, Micron is really weird in terms of its timing because we're not at earnings season at all. Is it the end of the last earnings season? Is it the beginning of the next one? I kind of categorize it as the end of the last. Um, but it's really far away from everybody else. But Micron again last time great report, but they sold it down. Microsoft is probably the best example. This is one of the best earnings reports I've ever seen. I would almost put Micron up there with it. Excuse me, from an established company at least. They got Microsoft up massively on that earnings report, and this thing has barely caught a bid since that report. Um, Meta, similar but different. Meta had also been on a really big run, also had a phenomenal earnings report. They didn't sell it down, but they didn't continue the stock after its report either. Um, what else? Both AMD and Nvidia were that way. AMD's report, um, uh, sorry, got distracted by something with that LAC. AMD's earnings report, I think, was huge. It was also a really good earnings report, and they gapped it down and sold it heavy at the beginning of the day. But there's another one. Like, look what AMD did into that report. The stock over the course of a couple of months had gone from $110 to 177 into the report. It was good they sold it down. And I would even categorize Nvidia's last report as a pretty good one that they sold down. So we'll see what Micron's able to do. I think that the response to this Micron report is actually really important right now for how the whole market has been trading, and particularly this high flyer list that we've been looking at of Micron, WDC, SanDisk, STX. They've all been kind of trading together. They have, I guess, some similarities with their business. So we'll see how they end up trading it, but I don't see the Micron could have reported a better earnings report than that. I mean, it's incredible. Josh giving me a headline here. Micron and data center expect calendar year 2025 total server units to grow about 10%. Okay, I don't know if that's good or not, but it's probably good. It's probably good. Let's turn things over to. I don't think it's enough. Let's turn things over to the market. Um, so the market had a down day today. Uh, Look, it's only a 0.5%. It's only a 0.5% down day. So let's not get too excited. I know it's like we see down days so rarely at this point in time that seeing a 0.5% down move, it's like you get a little bit excited. Is there gonna be more? Is there gonna be more? Is there gonna be more? So we can assess the technicals here to see if it technically changed anything. But SPY's finished down 0.5%. The Q's finished down 0.65 or so. The IWM finished down 0.2. The Russell was relatively strong all day today. The TLT was up 0.75%. That almost seemed like a little bit of a fear trade, maybe, with the market actually selling down for the first time. And it's one of the several things that I've been paying attention to is a little bit of a red flag right now with how the market's been trading, but we can circle back to that in a second. The dollar finished pretty flat, down small. It's within a range. Gold finished up 0.4%. Oil finished up big today, up 2%. What am I missing? Bitcoin down. Bitcoin was down again today. It was green for most of the day. I guess they sold it off when they sold the market a little bit. I didn't realize that. Bitcoin down again. Ethereum up really small after getting crushed yesterday. What's the Solana doing? Solana was down again. Just trying to pay attention to this whole crypto space. And FXI got hit a little bit further down. Wanted to bring that up as well. All right, so let's start with the technicals of the market, and then let's try to assess some of the information behind it. So, um, let's try to put a impact here for the market. Ideally, you would have gotten a close just below yesterday's, like a little bit below yesterday's low, but it's a good percentage retracement. If you were to combine yesterday's candle with today's candle, you'd have like a nice upside tail. The question is, is that technically that's a retracement pattern? There's no extension, so retrace to where? Usually you retrace to the equilibrium area. We're already at the equilibrium area, the ADMA, because this market has been grinding, having like an accelerated grind higher. It has now had a momentum move higher that has led to a lot of upside extension. It's been a like moderate grind higher that has kept us in like that no man's land of moderate extension where you don't have a good risk reward to buy and you don't really have a good risk reward to short. We have a little bit of a potential king queen top here. We will see if we can get any downside follow through on it. I would remind you guys that we are in seasonally the weakest period of the year, and we are in the sell Rosh Hashanah buy Yom Kippur old old fashioned trading saying we're within the midst of that pretty much starting now. So let's see if this potential of a king queen can lead to anything further tomorrow and get us deeper into this equilibrium area, potentially even have us retest the Fed low. Retesting the Fed low, I don't think is impossible. So hoping that Micron actually would be an extra piece of the sell-off that seems to be, some heaviness in the AI trade. Again, really, really, really incredible report from Micron, so it's not helping with the thesis. The Qs here, also not even to the ADMA on the daily, but we have a potential king-queen top and the IWM giving a push through of 245 resistance, push through failure with an upside tail. So we actually have the technical makings here of a potential retracement. I want to combine that with some other information. I feel like I'm seeing like a whole bunch of notable divergences happening that have not had any impact on the market. First and foremost has been the VIX move, right? So we have seen um, spotted vol up for a little while, but it's been particularly noticeable, I think, the last two trading sessions. The VIX working its way to as high as 17. So if you just compare, and I know that the VIX and SPYs don't necessarily trade perfectly correlated to one another, but this is yesterday on the VIX. We worked our way up to like a little bit above $16. Today we broke higher and extended. If the SPY did create a perfect correlation with the VIX, like perfect, the opposite correlation, which we know that it does not, this SPY should have been much, much, much lower today. So we started to notice that yesterday, right? The market was really moving up with the VIX really moving up. And this morning also, the VIX was continuing to move higher this morning while SPYs were stuck in range. And then finally, these SPYs started to crack, and then that acceleration, really continued around 1:30 or so. So it's one thing that I want to know. There's just a whole bunch of like warning signals that I'm looking at right now. So what is the VIX? Two is the crypto space. Bitcoin in red for the second day in a row. It's working its way to near some support, like $62 in the IBIT ETF. I think it's like 10,000 or so in the spot Bitcoin. Um, but it was a really, really big sell day, I guess, over the weekend and yesterday for crypto. And Bitcoin actually held up best. It was like Ethereum and Solana and altcoins, I think, got most smoked. And the reason why I even think that that's mentionable is because um, crypto is just becoming more and more intertwined with the economy and honestly with the equity market. I am looking at Bitcoin right now through a Bitcoin ETF. If you are long on margin, the Bitcoin ETF, and it sells down hard, you might get a margin call. If you get a margin call, you might raise money by selling your Nvidia stock or something else, some other equity to be able to fund that margin call. So that's what's becoming more intertwined, and I think it's noticeable. I think that the FXI move back down is also something to take note of. I've been a big China bull. It's been an incredible move, but I think that some of these names have honestly started to get a little bit ahead of themselves. I have an interest in buying a bigger dip in these stocks, but some of the froth coming out of an incredible move over in Hong Kong and Shanghai probably makes sense in a certain point. Same deal. It does have the potential of a knock-on effect to some degree on the equity market. Next, I thought it was really interesting, even though TLT is up today, that the one space where we really saw the concept of buy the rumor, sell the news play out on the Fed announcement was in the TLT itself. But the equity market continued to move higher, continued to squeeze. The IWM in particular continued to squeeze. So interest rates actually moving up since the Fed announcement per this TLT should also at some point have some weight on the equity market, even though we got a little bit of a bounce back today. And even, the dollar. I was concerned about the bullishness of this UUP ETF breaking the support from August and September, but snap right back into it. And it's still not impossible for us to see a dollar squeeze to the upside just completely on positioning if we start to get above like that 27.50, 27.60. At this point, there's no danger zone here. It's just kind of range bound, so it's not really being as supportive or as much of a headwind either, but notable. So there's just a whole bunch of like red and yellow flags right now with this market. And then the biggest thing to me is some of the positioning stuff. I posted two charts in the virtual trading floor today that came from our favorite, Charlie McElligott over at Nomura. I'm not going to repost them right now. I'll just talk about them. Just trying to find it in my other screen again here. So one was the systematic positioning, right? So I shared a chart in the VTF that showed U.S. equity systematic flows, ball control plus CTAs plus risk parity at the 100th percentile. And I guess that's going to look back to late 2022. And if you eye the chart, the long exposure here for those systematics is now longer than at any point over the course of the next few years and last few years. And if you remember, like back in February and a couple times in 2023 and 2024, systematic positioning getting very long was a big signal for us to start looking the other direction of the market. And now the systematic positioning for this chart is longer than any other situation that we have had over the course of the last several years where we have correctly called out for bigger picture pullbacks in the market, right? The thing we know about systematic positioning getting this long is it doesn't necessarily have to lead to selling. One of my favorite examples of that, it always eventually leads to selling at a certain point. It doesn't have to, right? The timing on this can be very difficult. Um, so it's not like a timing mechanism so much as it is a market dynamic where you recognize that, if selling comes, selling leads to more selling and can really accelerate. And I remember, back in 2024, I think it was in late February 2024, it seemed like, okay, like the systematic positioning is getting very full and the risk is becoming to the downside. But we were able to grind up for like a whole another month and a half before it broke down. And then when the breakdown occurred, as you can, see here, I'm not going to bother zooming in on the chart. When that breakdown actually occurred in April of 2024, it was a bigger deal because of how long that systematic exposure had gotten and the unwinding effect of that systematic exposure. And now that systematic exposure is longer than at any point it's been in since, as far back as this chart goes. The chart goes to late 2022. And we were at the 100th percentile of long exposure. What does that mean? Well, it doesn't mean that we have to start selling today. Like the example I just mentioned, if we have no realized volatility, then you don't get any selling from the vol control funds. If you have no trigger of the CTA chain following community, then you don't get any selling from them either. But if the market ever can begin to show a down move or show an increase in realized volatility, then it very, very quickly can feed on itself. And that was one of the more interesting parts about today. And we had to look at the 1 day potential of vol control selling as it was modeled to see that. I don't remember it off the top of my head, but I think it was if we could get a 1% down move, that it would be met by an extra $20 billion of selling from the vol control world. We had a 0.5% down move, so still nothing dramatic, but I actually think that we saw a little bit of vol control selling from that aspect of the systematic community as well. And the question is, can it feed on itself into something more? And can that forced selling bring us down enough to cover the next potential wave of selling, which would come from the CTA trend following community? And then the other really big one that I thought was very notable beyond the systematics is the leveraged ETF rebalancing charts, which also now are beginning to show, they're modeled to show, I think, asymmetric risk to the downside. It still needs strength. The other chart that I had shared into the VTF from Nomura, it showed index rebalance projections based on options plus levered ETF dealers having to buy or sell. And what that shows is if the market could go down 3%, I don't think that has to happen in a day. If the market could go down 3%, maybe over the course of a few days, you'll be met with an extra $90 billion, $91 billion worth of selling into the downside. If we get a 5% down move, then it feeds on itself even more. Into a 5% down move, you get $141 billion worth of additional selling that comes from this Charlie Nomura likes Charlie Nomura. Might as well his name might as well be Charlie Nomura. Charlie McGallagher describes this as like synthetic negative gamma, where into the up moves it forces even more buying. Into the down moves, though, it also forces even more selling. So I just think that there's really asymmetric risk to the downside right now, and I would just go back to what I thought was a phenomenal quote, even though someone on the YouTube channel last week who just doesn't understand how this stuff works wanted to make fun of me for it. Scott Rubner had an incredible quote, I thought, in his latest note that basically said, if we can go down a lot, if we can go down a little, then we could go down a lot. And what Scott Rubner and Charlie McGallagher understand is market dynamics and flow of funds and positioning. And it's exactly the data that I'm describing here. If you could get down 1% a day, it's fed into by $20 billion of selling from vol control. If you can get that to lead to us going down 3% over the course of a few days. You'll get even more selling from vol control, plus an extra $90 billion of selling from the levered ETF rebalances. Plus, at a certain point, you would also see an additional selling coming in from the CTA trend following community. There is the potential of an extraordinarily large unwind that would be forced to take place because this is just how markets work now. Um, it's feedback cycles of buying and selling that are all done in the most systematic way based on these products that we have developed that have influenced market structure. What are those products? Those products are options. Those products are leveraged ETFs. But the question still remains, can you get a big enough of a trigger to actually create the selling? And on top of that, the other flows that are in the market, some of them are still really strong on the buy side. Retail has still been really strong on the buy side. The corporate buyback bid has been really strong on the buy side. That gets less and less and less right now as we're in the blackout window for buybacks, and that's increasing as you get into the beginning of October. There's less companies on their own bid right now because of the upcoming earnings season, and also notably, despite the fact that we just had OPEX on Friday, the gamma is still really high into the down moves. I saw a chart. I don't remember if it was in the same Nomura note or if it was from Goldman Sachs note that I read earlier, but I think it was from a Goldman Sachs note. It implied that the gamma roll off from options, so Apex on Friday, which opens up like the window of weakness that we like to discuss, brought us down from like positive 12 or 13 billion to like back to like positive 7 billion. So you still have a roll off, but honestly, well, 10 billion plus is extraordinarily large. Um, 6, 7, 8 billion is still like very large, honestly. So that is pushing the downside to some degree, but I think that has the potential to get overwhelmed by some of these other flows if the flows can actually ever be forced through. And that's what made today a little bit exciting. It was like, okay, wow, like the VIX is really moving higher today, and now the market's rolling over, and I know that the market's only down half a percent, but it's doing a little bit of technical damage here to the market and has the potential to accelerate if some of these other triggers can actually trigger. And that's why I was hoping that this Micron would be a not great earnings report and actually get sold. And it was, this is one of the best earnings reports I've seen. It tells you how overbought this stock was into the report. This Micron earnings report is like one of the best earnings reports I've seen, and the stock is only up like $2.5 right now. So we'll keep an eye on that tomorrow, and there's a potential that even if Micron just trades in this range, that it actually could hit these other high flyers that we've been looking at, the SanDiscs and the STXs and the WDCs. But I was certainly hoping that this Micron was just going to be met with outright selling that could bring down those stocks as well, because I've got some positions there. So we'll see if the old timey saying of sell Rosh Hashanah buy Yom Kippur is gonna be coming in play or not. So far, it feels like it could be a little bit of a start. I certainly would have liked a little bit of a weaker close, but I didn't get it. So that's all I got. People in the YouTube are kind enough to let me know that the audio is not great. I apologize for that, guys. It's specifically when I'm traveling. It's my travel setting. And the guy who used to really be able to help me out with this stuff is not working at T3 anymore, unfortunately, and one of the tech guys who actually cared. Um, so I don't really know who to turn to for help, but it's very specific with my travel setup. So it's hopefully it's just muffled audio on the YouTube for this week, and hopefully it's enough where you can kind of hear me, and um, and it'll be better next week when I'm off my travel setup. So sorry about that. Uh, Steven from the YouTube wants to know. I was wondering if you have any thoughts on CIFR. Cipher mining. So I'm not familiar with the stock, so I'm not gonna have a strong opinion for you on it. I don't really know this one. But man, if this is just one more example of a chart that's just gone berserk recently, and there are so many examples of this. There are so many examples of this. This was a $7 stock a couple weeks ago. It's a $14.5 stock right now. Um, there's just one example after the next of these types of stocks that are just squeezing and squeezing higher. And again, I don't know this name specifically, so I don't want to overly comment on it, but my general thought process is the run that we're seeing in so many of these names right now is not sustainable. I think it's the last leg of this maximum pain trade where they're just squeezing the things that the funds are most short. You can see that with this OKLO getting downgraded today, yet continuing to close on highs and make new highs. You could see it with these quantum computing stocks where they got hit down a little bit when the QUBT did the secondary offering. I don't know why they all don't do secondary offerings. Honestly, at these prices to raise money, I would assume that most of them could use the money. Most of these companies don't even have any revenue yet, but still IonQ held them like a champion. RGTI closed at highs. I mean, they started to run like Plug, though they sold Plug heavily off of its high. Plug is a huge signal for me always. When you start seeing Plug run, you know that the whole market rally is almost over. And Plug just went up like 5 days in a row, so 15% at one point today, but it did close red. So those are squeezing things left and right. So I don't know what this cipher is, but it's just one more example of dozens of a company that and I don't know if this is a bad one or not. Many of them are that have doubled within the last couple of weeks. So I hope that helps. Back over to the VTF. We don't know where the SPY sell trigger is. I'd imagine it's around 650. You mean from the CTA community? I've been following it more with the SPX and look at the SPX and like try to have an idea. I have not seen an update though. I think 2 weeks ago, Bank of America had it at 6,400. Goldman hasn't given us their number in like a month. I don't know why. So it's got to be somewhere above 6,400 at this point, but I really don't know. I really don't know where it is. If anybody has access to research or connections at some of these big banks, it'd be great to know where it is. Have you seen an update on the Bank of America one there, Rich? The thing I like about the Gold one too is one, it seems very accurate, but two is they give us three levels: a shorter one, a medium one, and a longer one. Probably for three different like versions of that systematic community because we lump all of the systematics into these like kind of three main categories: volatility systematics, trend following systematics, and risk parity systematics. But really, there's a lot of subsets within that that are doing things based on different rules and different time frames. So that's why I like the Goldman one so much, is because they give you like three different levels of the CTA trend following systematic community that are probably based on the three different time frames that they measure. And again, it seems pretty accurate to me. Um, so at this point, I honestly do not know where the first trigger is. But if I had to take a pure guess, I would guess somewhere in the 6,500 area for the SPX, which we're pretty far away from. But if you get there, you can get there quick. Uh, you get there quick, and that's what I'm saying. You're not going to see the trend following community sell first because the trend has been too strong. You'll see volume control sell first. And then if vol control combined with the ETF rebalance structure can bring us down enough, then it'll knock into the trend following community. And it could be a thing where it happens very, very fast, or honestly, it could be a thing that it happens a little bit more slowly. Um, where you're beginning to push lower and then you have another down day or you have an event and that accelerates things a little bit but gets us to some other levels. So I don't have a good, people have asked me when a sell-off happens, what do I think it'll look like? I don't have a good feel for that. I really want to take it as it comes. This could happen in a couple ways. It could happen in a very accelerated way, and there is some thought process I think behind the some of the macrodynamic structure behind the VIX right now that could lead to a bigger acceleration in the VIX. And if you get a big acceleration in the VIX, then you probably get a fast sell-off in the market. But I can also see a little bit of a market that begins by kind of dribbling lower and then accelerating lower like after another week or something like that. So you start to dribble lower, you see a little bit of unwinding from a couple of those communities that I discussed, but then it knocks into something from other cohorts, and then that's when you get the acceleration. I think either of those things could happen. Um, Bank of America note Rich says ES 6438 to 6534 range. So, roughly 6,500. From Ryan, another divergence that has me scratching my head is Bitcoin weakness versus WGMI, the miners' strength. Um, yes, not sure it'll play catch up, but it's notable. Yeah, I mentioned that when I was on the radio at one point as well. It was in Pat's note here, um, from Goldman Sachs. Side note: stocks related to Bitcoin are up 39% over the last 20 days, versus the actual Bitcoin is up 50 basis points. But that just goes to show you it circles back to when the gentleman in the YouTube asked me about CIFR, and I'm like, it's another stock. It's up 100% this month. I don't know anything about it, but it's another stock. It's up 100% this month. They're continuing to squeeze these maximum pain names. And it's interesting. It's interesting that you would think that those stocks would fall first in a down move. I kind of think that they fall last in a down move. Because I kind of think that this down move is like a maximum pain down move. When you look at like gross versus net positioning from the institutional players that are out there, you can see in the data that they haven't really believed in this rally, so they've been trying to hold on to shorts even as the long exposure has increased. But where the shorts are focused are now in the names that are getting most squeezed. And again, even today, when we actually saw a down move, you still had all the quantum names close at highs. You still had uh, uh, blanket. You still had, whatever. Okay, hello, close at highs. Who did that WGMI close today? At least this one didn't close at highs. So we'll see. Yeah, a lot of really like I just described that, Ryan, and that's another great example of another one of these just like strange things that are happening in this market, but yet the market itself can't actually go down. Uh, from Liam in the VTF. Today, Trump was talking about boycotting Russian energy with nuclear being hot. This LEU is the only supplier of uh, Halu. I don't know what that is. Halu, HALEU, uranium that powers the SMRs, the small reactors in the US, and we depend on Russia. It seems like that headline It seems like that was the headline that would make the stock and make that stock explode, and it really hasn't. Do you think that idea is shot, or maybe just need time for the news to disseminate? All of these are super extended as well. Yeah, so I really don't know. It seems like you know a whole ton more about the nuclear space than I do. It's not something that I'm honestly well researched on or well educated on at this point. I probably should do a little bit more. My direct answer to is I don't know. I don't know if it was already priced into the market or, I'm assuming that everything you're telling me is accurate. I'm sure it is. I'm sure you've done your research. But sometimes is the market participants are people like me, and we don't always know everything, right? So if you don't know, then you're not buying it, kind of, which seems to be the gist of your comment. But it also had 3 huge updates into the news today, so it could be part of it as well. I wish I had more for you on that one. I would just note that one of my favorite signals in the market is when positive news comes out for a stock and it can't continue. A lot of times it's a signal for the other way. Which, by the way, I think you should be paying close attention to this Micron. If positive news comes out from Micron and it can't continue, a lot of times it's a signal for the other way. And that was one of the best earnings reports I've ever seen, and it's only up $2.50 from the close. From Uvixi Bull. Next time you're in New York, I'll walk over with a headset from Best Buy or something. We'll figure this thing out. Okay. Okay. They're basically the only supplier of uranium for SMRs. That's CCJ, right? Cameco. I'm assuming that's how it's pronounced. They're behind. So LEU is the one. Okay, good to know. From Eddie, can I get your thoughts on my DraftKings trade? Sure, sure can. Start with the daily chart. So the daily chart does not look good to me. Stock has been relatively weak. The market's at all-time highs. The market has had an incredible September. The stock has been really weak. It put in a extension down pivot low on the 17th and has grinded back up into the moving averages. I haven't even read the rest of your question yet, but whatever your question is going to be, I always need to start with an analysis of the daily chart before I do any small time frame trading. Even if I'm only going to take a day trade, even if it's going to be I'm buying it quickly, I'm selling it quickly, I'm in and I'm out. For me, the market is a really important layer of probability, and also relative strength and relative weakness is a really important layer of probability. And if a daily, and I always want to be in the direction of the daily chart. So based on the daily chart, before I even read any of your question, based on the daily chart, I would rather be short this stock than long it because it's a weak name that just bounced back to its equilibrium area. Now, when I have that assessment done, I can then look at the small time frame to see if I have any trades that are in the direction of my analysis of the big picture. With that said, let me read the rest of your question. I went long So that would be my first problem with the trade, even though I haven't read anything else. I went long at 10 a.m. Okay. I, I see the 5 minute pattern already. It's a nice looking bullish 5 minute pattern. Let me read the rest of your question. I went long at 10 a.m., 5 minute candle before it formed, seeing that it broke the high of the day in the 4409 area as I was expecting a breakout. I used the 945 low as my stop, which had obviously failed. How do you rate the trade setup? See, so this is why it's so important whenever you're getting involved in a trade to use a multiple time frame analysis. If I only saw this 5 minute chart and I didn't know what the market was doing and I didn't know what the daily chart looked like, I would tell you this looks like a great trade. I like this pattern. Stock is strong. It's moving higher. It gives a little bit of a deeper pullback than you might like, but it generally holds its equilibrium area to create a nice pivot. And it's coming back up into the intraday resistance after creating that pivot low, and it looks set to break out. I love all that. But when I look at this daily chart, I say to myself, where can this thing go? It's I'm buying a relatively weak stock with a weak daily chart into the equilibrium zone above the 8 EMA. Basically you're buying this thing in the midpoint between the 8 and 21 EMA in a weak stock, and that makes me really not like it. So personally, I would rate this as like a C minus, maybe a D plus trade. You got to have the daily chart and the market on the side of your trades, even if it's just meant to be a day trade. And the reason why it's not an F is because the 5 minute looks so good when you take it. The 5 minute pattern is fantastic. I clearly see what you see on that. But I can't be taking trades that are contrary to the daily chart like this one. Appreciate you asking the question, and I really hope that that helps. Um, yeah, Holy Earth, thanks for joining. I know that the audio is not good. I'm traveling this week, so I'm on a travel setup. So the audio isn't good, and I apologize, but I could choose to not do the afternoon meeting at all, or not broadcast it when I travel, or we could just do it with unfortunately not great audio while I'm traveling. I apologize. I wish it sounded better for you, but I'll be back in New York next week, and the sound will be back to normal. Um, somebody had to ask me this. It's always Steven in the YouTube who was trying to ask me the controversial questions. Was it you that got me going on the H-1B visa rant yesterday that I'm very upset about? Steven asked me, I don't know if you have a strong opinion on this. Any thoughts on LAC and the U.S. government? Uh, yeah, I do have a strong thought on it. I don't think that the U.S. government should be buying private enterprise. This is socialism, and I am not for the United States becoming a socialist country. We should not be taking stakes in companies. Uh, period. I didn't support the General Motors stake that we took, which I think was under Obama. I don't support the Intel stake that we're taking, which is now under Trump. I don't support this LAC chatter. Um, the government should not be having a hand in buying private enterprise. Uh, it it sets a really bad precedent, and I mean, there's just so many problems with this. First of all, you could just start doing a thing where if you're the president of the United States and your friend owns a company and you want to help your friend out, you could buy the stock out at an obscene valuation. I'm not saying that's what's happening here. I don't know anything about LAC, but that's a precedent that you could move in that direction. And then you could start having the government try to control the actions of these private companies. And from my perspective, the government operates extraordinarily inefficiently. I don't want them involved in the decision making of private companies. I don't like this at all. I'm a believer in capitalism, in free enterprise, uh, in competition, um, and that's it. No, I'm not using the Yeti mic on my travel setup because it's just too big and bulky to carry around to 6 different states. I've been all over the place on this trip. Uh, so yeah, I mean, I'm extraordinarily against the U.S. government taking stakes in these companies. I mean, it's like China, and I think that there's some good things that China does that we could potentially learn from, but this isn't one of them. So that's my thoughts, only because you asked, and honestly, it presents a really new danger to being sure. Because they could become any stock right now and just have the U.S. government decide that they want to take a stake on it. So if you're starting something, make sure that it's at odds with the administration. I mean, that's what the stock market's turning into, and it disgusts me. The fact that Tesla could go up as much as it did yesterday because Elon Musk sat next to Donald Trump. That's not what I want this country to be. And I don't care what the president does. The problem is, you might be a big supporter of Donald Trump, and that's fine. But you got to recognize the precedent that's being set here can apply to the people that you don't like as well. So, maybe the next president is the one that you don't support, and then it become the precedents that were started under this administration carry on to someone that you don't like, and you got to recognize that that could be really, really dangerous in the other direction. This is not how it should be. There needs to be separation here, but that's my opinion because you asked. All right, gang. It is 5 o'clock Eastern, 4 o'clock here in Chicago. So I am going to wrap up today's afternoon meeting and go explore the city a little bit further and contemplate on whether or not I think this market can give a day two to the downside. Have a great night, everybody. I will see you all tomorrow.